Here we have the current stock market update for Tesla Incorporated, stock ticker TSLA. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons, and leave your thoughts in the comment section below so that other traders can find this information more easily on the platform. So what we're looking at here is the 2-hour time frame. I haven't changed any of the trend lines or chart markings here relative to the prior video. And what we can see here is that the share price has actually managed to find some support at this prior Fibonacci retracement zone that we were watching previously. So, we really haven't seen much of a bounce here just yet, but this is working as a support zone at the moment because the share price itself did take a fairly major dive here following that robotaxi event, and share prices did, really form a price gap in the process, as we can see right here. So if we sort of zoom in a little bit, this is a lot of downside price action, which is a little bit surprising because, earlier this year we saw several Apple events that really were positive for the stock, and some substantially so. Like that all-time high in that stock that was created this year, that was following an Apple sort of marketing event, sort of a convention. And there really wasn't anything unfolded at that event. I mean, the criticism about Apple is that they're not really doing anything with AI. They just keep giving you an iPhone with a slightly bigger hard drive or something like that. They might change the camera a little bit. Boring. And that's, that stock moved to all-time highs. So, that did not happen with the robotaxi event. People were not impressed with the robots or whatever. Okay, so what we're seeing here currently is a support zone that is starting to form after all of this downside price movement occurred. So, at the moment, I mean, this is starting to look a bit weak here because we're not seeing much of a bounce at the moment. I still think that this area could be used as a sort of a shorter term trading point. Sort of an area of support to start trading. But, this is starting to look a bit weak here because we're not seeing much of a bounce. And the trading volumes that we've seen have also sort of spiked in negative territory. So those are not positives. If we look at the indicator reading here, we can see that the majority of the momentum at this point is still negative, but we are trading in very oversold territory at the moment. So this is a fairly extreme reading in the relative strength index. It moved down to right around 20.5. So that's a heavily oversold reading. And you would start to expect to see sharp prices bounce from there. So I think that in the prior video, I think the argument I was making was, we're moving into heavily oversold territory. And then at the same time, share prices are sort of validating the 61.8% Fibonacci retracement of that prior ascending move from 182 to roughly 265. So, you had this Fibonacci support zone, and then you've also got the fact that share prices are kind of heavily oversold and starting to roll over a bit. So, you pair those two things together, and you do have, really enough to start moving forward with a short-term long trade. And I still think that outlook appears to be valid, but this is starting to look weak here at the moment, and I would have preferred to see a little bit more of a bounce. So it's possible. I mean, if I didn't enter into a long position here, but if I had done so, it's possible that I would even consider closing it here because we're really not getting much of a bounce. That might be the type of situation where you could even close the trade right around your break-even point or something around there. I would still maintain the bullish bias from here because we're still, we're heavily oversold and we haven't seen a breakthrough this area. But, I could also understand anybody that might have taken a long position here wanting to sort of close the trade before we possibly move lower. So both of those are valid arguments. As things currently stand, if we do break below roughly right around 220, support it right around 220. The next level to watch to the downside comes in at these 203.30 lows. This would be the price low from August 28th. So that is a possible target here to the downside. And then if we do see sharp prices move higher, The real question is whether or not we start to run into resistance at these exponential moving averages. So this area here, it's possible that we could start to run into resistance at that point, but we still have a price gap here that's fairly substantial and it's new. So most of the orders that would have been parked here presumably are still active. It's possible that some of them were closed, but we're not talking about ancient history here. We're talking about October 10, so that's 5 days ago. So it's not even a full week. So, if we do start to kind of move into this price zone here, there is definitely still a possibility that this share price gap can be filled. And that would be another reason to take a long position because, that's a lot of free momentum to the top side that you could be capturing if share prices really are able to bounce off of this Fibonacci support zone. So these are the main levels that I'm watching for the moment. Overall, this we are trading in oversold territory in the indicator reading, but there is still negative momentum that is sort of influencing this stock. And this is an important momentum reading because, as you can see here, this is the momentum that sort of began at those 271 highs. So that is a very significant zone of resistance at the moment. And what is really interesting here about this stock is that, we were really moving back into these old highs at 271, but then we fail, $5 or $6 ahead of there. So, and then we start to move lower. So, kind of strange to see that share prices moved this close into those prior highs, but then still failed to test that area by such a wide amount. So we're talking about, $7 or so to the top side there. So, kind of strange to see that type of development because at the moment we do have you have to call this a series of lower highs at the moment, and that is a bearish outlook here for the longer term. So, at the moment I would still, mostly remain bullish here. I think that you could probably still take a trade here into this region because there is still this price gap that needs to be filled. And the resistance support zone that we were watching in the previous video has not yet been broken. The bounce here has been weak, so that's a little bit of a warning flag here. We could start to break below here, but this is also a trade that you could take with a relatively tight stop. You could take it right around 219 here, and then possibly even stop out around 212 or so. 212.20 is probably where I would place my stop loss. So here's the current stock market update for Tesla Incorporated, stock ticker TSLA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.